There's a new investing app in town, everyone, so that can only mean one thing. I'm going to review it, let you know all the important bits, break down the pros and cons, and then also give you my own personal thoughts on whether this really is a new contender to some of the big players like Trading212 and Freetrade. First up, let's figure out where this app's come from. Dodl's a new platform started by the team over at AJ Bell, an already well-established name in the investing space and the public company in their own right too. They say they've got over 400,000 customers already and manage around £74 billion worth of customer funds. The platform allows you to invest using almost every type of account, whether it's a general investing account, a stocks and shares ISA, a lifetime ISA, and a self-invested personal pension. Remember, like a lot of these newer platforms, everything's done through the app itself, so don't expect to be able to log on to any website. You'll need your smartphone to sign up to manage all of your investments. Once you've got your account set up, here's your options for investing. Dodl offers a range of individual shares across the FTSE 350, a select number of funds and ETFs, as well as their own AJ branded blended funds. Although I'll touch on this later when I break down pros and cons, there's currently no US listed shares here right now, so you won't be finding any Tesla or Apple here on their own. The UK shares listed here are broken down into different categories that you'll see here with a brief explanation of what the company does. You can browse through the categories like finance, travel and utilities and then just take your pick. Annoyingly, there's no search function or anything like that on the app currently, so you have to just browse manually through their own different sections. To add money into the account, you've got a couple of different options. You can actually use Apple Pay or Google Pay, depending on what phone you're using, or you can use your debit card and then the funds are available instantly. As I tested myself, no messing around here. For fund choices, you've got two sections here. Firstly, there's a list of AJ Bell's own managed funds, which there are 7 of. These funds are broken down to reflect basically how adventurous or risky you want to be as an investor, which means they've got different allocations worth of bonds and equities to reflect this. The more cautious funds will have more bonds and fixed income products, whereas the adventurous funds or the Global Growth Fund will hold the majority of its holdings in equities like the FTSE 100 and the S&P 500, as well as other markets around the world. These funds look very similar to Vanguard's Life Strategy range and are a one-stop shop for investors who just want to set and forget. One thing to note here is that you can invest monthly on this platform, so you could easily set up a recurring buy every month into your favourite fund to make things super easy. Outside of their own funds, there's also a selection of funds and ETFs, but it's not that big, having only 23 options to choose from across the major markets and industry themes. For example, you've got a FTSE 100 fund, an S&P 500 fund, and even themed funds like this one from the Robo Revolution. Funny enough too, if you go to the all-in-one section, these options are actually all Vanguard Life Strategy ranges. Most of the offerings seem to be mutual funds rather than ETFs if that matters to you, but that's all you get for now. For fees and charges, let's break this down. Dodl has a very simple but interesting pricing model. Per account, the charges are 0.15% platform fee annually, with a minimum charge of £1 per month. The costs are calculated and taken monthly and will depend on the value of all the investments in your account. Now, there are no trading fees or commissions, but there will always be stamp duty to pay when you're buying UK shares. You can't avoid this one just yet, as you'll see here when I've bought some UK companies in my account. So for example, if you had a stocks and shares ISA as well as a general investing account, your minimum account fee would be £1 per month per account, giving you £2 per month total cost. Because of the minimum fee, this will hurt smaller accounts more than larger ones. So in percentage terms, the smaller your account, the larger your fee is. I'll show you a couple of examples on where this break-even point actually lies. If you have £1,000 invested in the stocks and shares ISA, your fees would be 0.15% of that £1,000, which is £1.50 per year. Now divide that by 12 to get your monthly cost and you get 12.5p. But remember, there's a minimum cost of £1 per month, so your costs get boosted up to £1 and that's all you'll have to pay. The downside of this means that if you did have a £1,000 investment account, £1 a month turned annually into £12 a year means that your actual fees are 1.2%, which is incredibly expensive when compared to some other platforms. As the account value grows, your costs would lower as a percentage until you reach the break-even point of £8,000 in your account. At that point, your actual costs are exactly £12 per year based on the 0.15% cost. I hope that makes sense, but in short, smaller accounts worth less than £8,000 will pay more than the 0.15% account fee. One final fee is the FX fee, which is 0.5%, although at the moment there aren't any US shares to buy, but bear this in mind in the future. Jumping back into the app, you'll also see a Learn section, which does let newer investors understand some of those basic concepts around investing in the stock market. It's written in a much less formal way than a lot of traditional advice, which is helpful, and I think it's a good step towards generally helping more people to understand why they actually need to invest their money in the first place. Pretty much what I at least try to do on this channel anyway. And then also in the app, if you need any support, you can use a live support function. I did try this and got a quick response, and you can also use emojis too, which might actually be a better way to express your question if you're struggling with words. Clearly they're very much down with the kids. Right then, with all that said, who's this platform for and what are the pros and cons? We've got a lot to talk about here. In terms of pros, I'll say right off the bat that I'm a fan of more competition in the market. The UK investing space is a bit of a mixed bag at the moment, and we're in this limbo period where all the legacy platforms taking on the new guys who are trying to eat that new market share pretty quickly. So bring on the competition, the more the better. Secondly, having an established brand behind them like AJ Bell means that as a customer, I'm going to trust the platform a lot more than some of the newer kids on the block who are either losing money to gain customers or having to crowdfund to grow. AJ Bell's a public company with history and trust, and that's really important in this industry, even though yes, of course, you still got those protections from the SCA and the FSCS compensation scheme. I like the simplicity of the fees, although I'll speak about this in more detail in my cons section. Having a really simple fee structure is important, and I think the average person can understand it when compared to the structure of Hargreaves Lansdown or even the AJ Bell themselves on their main platform. Next, I think having a wide selection of accounts is good from launch, as some other newer platforms don't have stocks and shares ISAs up and running yet, or things like pensions. So being able to use all of those available tax wrappers and account types is very useful, and even having a lifetime ISA too is a nice touch. Clearly it helps being supported by a large brand behind the scenes. And finally, it's only a small point, but having the ability to save and invest monthly is a positive note and not something that all platforms have in this space, especially some of the newer companies. Getting people invested into habits of investing as they get paid is, for me at least, a really important step to getting people to build wealth. So what about the cons? I'll be honest, I think the platform's missing a huge amount, and that has a very long way to go to compete in the current market. But I'll go through each of these points one by one. I'm not the kind of person to be negative for the sake of it. I hope that all of these points are fair, and this is from the perspective of someone who has accounts with pretty much most of the major apps and platforms and actively invests. Firstly, we need to address the lack of choice. Having just 50 shares and 30 different funds is really limiting, and in the current market, it's a very poor offering. I understand the need to be simple, and the more choice is sometimes a bad thing, but in this case, this is just not enough when you want to attract new customers and compete with the other platforms out there. We need access to the whole market, loads more ETFs, and a global offering of shares. I do understand that more offerings will come in the future, so watch this space and maybe I'll do a longer term review later. If you'd like that, make sure to leave me a comment below. Now, let's talk about fees. As I touched on earlier, it's a simple fee structure, but it's also one that hurts smaller accounts disproportionately. Having the 0.15% account fee is fine and matches the likes of Vanguard, but the £1 minimum charge per account hurts those smaller accounts all the way up to £8,000 in value, which is probably a lot more than most of their customers will probably have, especially if they're trying to attract beginners and new people. Thirdly, there's no search function at all in the app for investments. Now, I realise that you don't need a search function if there's only 50 investments, but it feels glaringly obvious that there should be one here, as it's very clunky going through the sections to look at investments. Also, the information on the company is limited. I get a price chart, but no high-level information like revenue, PE ratio, dividend yield, or any other key information. I think this basic level of information is essential and helps investors to make better informed decisions. Next up, I don't think the user experience is as slick as the competition. If I put Freetrade and Lightyear side by side and find investments to buy, look to place a trade or even find out more company information, the Dodl app is very far behind. It's not intuitive and there's a lot of dead space in the app which I think could be used a lot better. For example, if I open up my Freetrade app, the first page I get is a nice simple breakdown of my portfolio with a graph over time and all of my investments. With Dodl, I have to actively hunt around to see my investments and how they've individually performed. It's just not quite where it needs to be. Another point to note is that trading is not instant. When you're placing an order to buy a share, the order only goes through once a day. It's not an instant market order like other platforms. No doubt this is something that probably saves them money when all the orders are placed as a batch, but it just doesn't feel like a slick process. This means that an order just sits there until it's put through. You can cancel it, but it doesn't give you the same satisfaction of when you buy a share like the other platforms. Overall then, I'm a bit confused. I can't work out who this platform's for. On one hand, it's lower cost than the fully featured AJ Bell platform, so presumably they don't want to offer too many bells and whistles because otherwise existing customers will get pretty annoyed that they're being taken for a ride on fees. On the other hand, it's not got enough features or unique selling points that really compete in this current market against the likes of Freetrade, Trading212, and other newer platforms like Lightyear, who are all going after those new generation of investors and traders. If you don't get new customers on board, your existing customer base will eventually start drawing down their money and retiring, and there won't be anyone to replace them. It's the same issues that they're going to face at Hargreaves Lansdown eventually, and no surprise when you look at the declining share price of the companies. At the moment, this doesn't feel like a finished product. It's not simple enough, not slick enough in my opinion, and I don't think it's going to do enough to get the new crowd of investors to start their stocks and shares ISA journey. If anyone from AJ Bell watches this, Turn your view to a user perspective. What would attract brand new investors to join your platform versus any other? Be really critical here and really think. You've got platforms like InvestEngine offering free ETF investing. You've got Freetrade and Trading 212 offering no fees for their services. And then you've got Vanguard with consistently low fees and one of the strongest names in the market. So there needs to be something a bit more here to persuade me. Until things change, I'll keep a close eye on things. I genuinely wish them team good luck and I hope they succeed and grow. The market needs more competition, but right now it's just not quite good enough in my opinion. If you do want to look at some other platforms to see how this compares, take a look at my next video, which looks at some of the best investing apps and platforms for us UK folk in 2022. Thanks for watching this far. If you found the video useful, please drop me a like, subscribe for many more UK finance and investing content, and I'll see you in the next video. And as always, happy investing.